Friday. It's Friday. Are you as happy about the weekend as I am? I know you are. Well, Buffy is back. That's me with the second episode of the November Weekly Market Insight series, coming directly from the Capital Markets Trading Desk, right here in Sunwest Mortgage Company. Well, we all are aware that last week was one of the biggest macro weeks in a while. Remember the disappointing earnings, slowing consumer demand, China's ongoing COVID crisis, unresolved election results, and Fed Chair Powell ramping up the hawkishness? Well, let me say that that's all forgotten this week in the wake of a cooler than expected inflation. A concrete report came out to justify this information. Let me spill the beans to you. Yep, I got the tea. All right, U.S. inflation cooled sharply in October by more than forecast, providing real optimism to the investors that fastest price increase in decades is retreating and offering the Fed officials a core reason to slow down their steep interest rate hikes. The consumer price index was up 7.7% from a year earlier, the smallest annual advance since the start of the year, and down from 8.2% in September. U.S. stock index futures extended gains, and treasuries rallied to record levels after the report. Dallas Fed President Lori Logan just reiterated that the Fed still has ways to go to tame inflation, even as it slows the pace of hikes. She called this data a welcome relief, but the key message seems to be that inflation isn't cool enough for the Fed yet. So what else is happening? Well, let me tell you. Of the 450 S&P 500 companies that have reported earnings so far this season, 110 have failed to meet analysts' forecasts. Earlier this week, U.S. stocks fell and Treasury yields rose following the midterm elections that failed to yield a Republican sweep. Investors had eyed prospects of a Republican comeback in Congress, but U.S. voters delivered a mixed verdict, with Republicans heading for control of the House by smaller margins than forecast, and the race for the Senate still wide open. President Joe Biden said he is optimistic the U.S. is not nearing a recession the day after Democrats fared better than expected in midterm elections. China's COVID struggles also weighed on the demand outlook for oil, sending West Texas Intermediate crude futures slipping toward the $85 per barrel mark. A sell-off in cryptocurrencies also deepened, sending Bitcoin toward the biggest four-day slump since June. Bitcoin is trading around $16,200. Meanwhile, in the week ending November 5th, 225,000 people filed for unemployment insurance. The consensus call for claims this week was 220,000. So, now moving ahead, let's see what is happening in the housing market. All right, so according to the two leading home price indices, home prices fell sharply again. The Federal Housing Finance Agency booked a month-over-month decline of 0.7% in August. The S&P Case-Shiller 20-City Index fell 1.3 compared to a 0.7 drop last month. Meanwhile, U.S. mortgage rates resumed an upward trend last week, pointing to further weakness in housing demand. The overall measure of applications slipped and is the weakest since 1997. Refinancing activity fell to a 22-year low and was lower 4% from the previous week. The purchase index gained 1% from 1 week earlier. Okay, so now let's wrap it up. After the Fed decision and a disappointing non-farm payrolls reported last week, investors were looking for firmer signs of a peak in U.S. inflation that could loudly proclaim a slowdown in the pace and severity of the Federal Reserve monetary tightening. With the CPI figures reported yesterday, we finally have that in our hand. Fed Philadelphia President Harker did mention that he expects the central bank to slow the pace of interest rate hikes in the upcoming months. Now, the big question is whether the Fed will be able to manage a soft landing of the economy or whether a recession is inevitable. Well, to answer this, we'll have to wait and see how the Fed's policy actions are going to impact the economy. So that's all we have for the week. Please join me again for market updates, figures of various important economic data, updated status of Fed's pathway, and much more. Stay updated with our news, and our trading desk will keep you informed with our pricing incentives. You know that. So have a happy weekend, everyone. Buffy out.